Hello and welcome to this latest episode of IG Trading the Markets. I'm Victoria Scholar. Coming up, we're going to discuss cannabis IPOs and the opportunities for growth in the industry. Patrick Morton from Cannabis Invest gives his forecasts for flotations around the world.
The existing infrastructure of the publicly listed cannabis industry is way too small to supply long-term global demand. And I view it as we're only in the early stages of the rollout of this industry. So on a kind of 6 to 12 month view, I think we're going to have a very significant rally in the industry and the return of an IPO market globally, and with the UK potentially taking a secondary position, if not a leadership position.
Avihu Tamir, CEO of Kanabo Research, tells us about the key growth potential in Israel.
So I think that the Israeli market is going to be very promising on technology, IP development, and focus on medical solutions for specific indications.
To find out more, listen to our podcast, IG Trading the Markets. Welcome to IG's latest episode of Trading the Markets, and today we're here to talk about cannabis IPOs and the future opportunity. Are flotations in the marijuana sector a key area for potential investors to watch, or is the timing not quite right? In July of 2018, Tilray became the first marijuana IPO to hit Wall Street, delivering exposure and credibility to the growing cannabis industry, and investors welcomed the stock with open arms. Tilray closed higher by 32% on its first day of trade, raising $153 million, valuing the stock at nearly $2 billion. Now, joining me today is Patrick Morton, the CEO at Cannabis Invest, and Avihu Tamir, who's the co-founder and CEO of Kanabo Research. Thanks so much to both of you for joining me. Now, Patrick, let's start with you, because we've seen a whole host of IPOs in Canada and the United States within the sector over the last few years. So why have so many companies decided to come to market?
Well, I mean, it's really a once-in-a-lifetime opportunity. This industry is opening up worldwide for the first time in over 100 years, and you know, with legalization movements happening in a number of countries simultaneously, there's a massive new opportunity to supply consumers with, you know, safe, quality controlled, mass-produced cannabis products for medical purposes and, you know, for adult use or recreational purposes. And I think most people who are involved in the industry, which is really only 5 years old from a public market standpoint, I think most people believe that this will be a 10-year story from here as the market matures and new countries continue to legalize and new companies come to market. So, you know, for the last several years, there's been a really significant pop in the public market cap of cannabis companies, and then most recently a fair amount of volatility. But I think it's still early days in this long-term trade.
So, Avihu, I mean, there are a lot of cannabis companies that are still trading in the OTC markets. I mean, what kind of credibility does it provide when a company joins, say, the NASDAQ or the New York Stock Exchange?
So I think that in a short answer, it's a major credibility. Obviously, when the market is growing and you have now hundreds of cannabis stocks, some of them in a very small stock exchanges and that are not regulated tight enough, you have some companies that are not belong there and shouldn't have been in the market in the beginning, and some of their performance are poor, and probably management is managing it poorly. That's always going to be out there. That's going to be a challenge for the industry. But once you see big companies like Consolidation Brand investing in an evaluation of over $10 billion company, and you're starting to see a lot of smaller investors and getting into the conclusion that if these big brands, real businesses, investing billions of dollars in these high valuation, perhaps it's not only a fad, and there's a real opportunity.
So, Patrick, I mean, when we think about these cannabis companies benefiting from a flotation, do you think that's in some ways there's a lot of pressure for them to deliver on goals and being accountable to shareholders? How does that weigh up against if they stay in the private markets, then they can continue with that flexible stance, that flexible approach where they don't have to be constantly reporting quarterly results and a number of other pressures that we know well?
Yeah, I mean, that's an excellent point, and I think Avihu touched on it. In the last couple of years, the excitement about this industry has led to so many companies going public, some of whom, or if not many of whom, maybe jumped the gun and were not mature enough to do so and were too small to really justify being public companies. And that has sort of diluted the overall opportunity for investors and maybe diluted the quality of the offering and as far as companies, publicly listed companies. So, you know, in the short term, I think it's pretty well understood that we'll see a bit of a shakeout in the marketplace. Maybe some of the less professional companies will end up being delisted or closed down or be acquired or merged with other companies. But over time, we'll see a maturation of this industry, and then the public market, I think, will have a pretty significant rebound. But in the short term, like short to medium term, the access to capital in this industry is quite unique. The options for companies to raise capital is quite unique because of so many regulatory barriers, be it, you know, the federal illegality in the US or, you know, restrictions on the part of global institutional investors who are, you know, regulated by the SEC or the FCA in England, and who are very much restricted from investing in cannabis. So companies have been, you know, trying to be creative on where they get their capital. And, you know, the early movers in the Canadian marketplace have been the best option for many of these companies. And, you know, there was a time when, over the last 3 years, when that looked like a pretty outstanding option, raising money from largely retail investors in the kind of small cap, second and third tier public markets in Canada. And we're now seeing a little bit of a retracement of those big gains. But I think it's all part of this maturation process. And as we see those restrictions removed, whether it be the legal situation in the US or restrictions on institutional investment, I think those are going to be major positive catalysts for the industry, whether it be private companies or public companies.
So, Avihu, I mean, how do you see the benefits versus the costs from going private to public in this space?
So I think that when it's not going public, maybe going private, I would say it's staying private. And there's many benefits of staying private in cannabis, because cannabis industry regulation, it doesn't matter where you're touching on the globe, you will have regulation that is not clearly defined. It doesn't matter if it's the US, if it's Canada, obviously Europe, or emerging markets. And staying a private company, it's quite easier to navigate between these fast-changing regulations. And when you're looking at regulation between states, it's even farther away from being mapped than just internal state regulation. So that's one of the biggest benefits of staying private. And if you can raise the right capital and you don't need the public exposure, that perhaps make a lot of sense. But the benefits of being public, on top of just raising funds, that's one major benefit, but only one of them. Really getting this exposure of a company that is transparent, a company that has tighter regulation, passed through a regulatory body. These are things that in the industry that perhaps at least in some places still perceived as an industry of a gray market that is becoming legal, it's very beneficial. And legitimacy is one of these key issues there.
So just to pick you up on one point there, I mean, if IPO activity is slowing down, Avihu, where are cannabis companies going to find that capital instead?
So we see right now that in North America, you have quite a lot of VCs and private equity that filled their pockets with cash in the last year. And they will do private investment for probably the next 6 months, and that's not going to be an issue. Hopefully, we'll be on the other side of this situation after, and we'll see more public IPOs or IPOs. But in the same time, I don't think that all IPOs or all markets are saturated. That's probably the situation with Canada today, and perhaps with the small cap market in the U.S. But if you're looking at NASDAQ and the New York Stock Exchange, these are markets that still will give a lot of benefit and can raise money for cannabis companies. And obviously the London Stock Exchange that didn't even started seeing any cannabis activity there.
So, I mean, Patrick, to what extent do you think that it has become saturated, the IPO market, whether we're talking about Canada or North America or indeed the UK? I mean, it seems it's pretty clear that the flurry of IPO activity has slowed down. What's the kind of key driver there?
I mean, yes, that saturation is quite obvious, and I think it'll take some time, meaning sort of several months, if not into the years, before we really see a recovery broad-based in the publicly listed cannabis companies in North America. And you know, the reason for that is there's now well over 200 publicly listed cannabis companies in Canada. A lot of that is Canadian-based operators, and since legalization last year, the Canadian consumer market for cannabis has been a bit disappointing in total sales. I mean, the original forecast for that market was on the order of $5 billion annually, and at the moment, the run rate is only at 1 or 1.5 billion. So there's a twofold problem. One is oversupply of new issues, and the other is undersupply or a lack of underlying demand on the part of the cannabis consumer in Canada. And I think what we'll see, which will kind of breathe life into the industry, is globally, Canada is a tiny fish in a big pond globally. So as we see legalization in other bigger jurisdictions, that's a major catalyst. Secondly, the rollout of the supply chain in Canada has been like a major bottleneck for the industry, just a lack of sales points, really difficult restrictions on marketing and distribution. As we see more access for consumers in the Canadian market, the rollout of the retail sales networks and new products coming online later this year, the Canadian market itself will grow substantially, and I think that'll start getting people more excited again. And then thirdly, it's like, let's see a little bit of a rationalization in terms of the sheer number of publicly listed companies, and all of that. I think there's a bit of a danger in the trading environment that we have right now. There's a lot of pessimism, a lot of negativity. There's a feeling of don't catch the falling knife, and all types of news seems to result in a sell-off in share prices, even when companies report positive results. So we need to get a little bit of optimism back in the market. But with those three themes that I just mentioned, I think over the next sort of 6 to 12 months, we're going to start to see a turnaround.
So 6 to 12 months is the turnaround. Very interesting. Now, in terms of one point that you made there, which was about the sell-off in the market, when we look at IG's cannabis index, it's declined by about 50% from the peak in March down to November. I mean, clearly that's going to put off a number of companies from eyeing a flotation and actually coming to market. Do you see that market turning around anytime soon?
The market, like for publicly traded shares?
Absolutely. The broad kind of index that would encompass the major North American players within the cannabis space.
Well, the way I think about it is the publicly traded market cap of the cannabis industry sort of peaked last year at about $100 billion. If you think about what the true potential size of the global cannabis industry is, like including all of the blue sky, so potential development of medical markets in a number of areas, potential takeover of the black market, as well as, the total global legalization. We're talking about a potential market that's like $500 billion to $1 trillion a year of potential. So even at its peak, $100 billion of market cap is really not that aggressive relative to the potential size of total demand. But I think what we're realizing is that it's going to take years and years for that full market to develop, and a little bit of a retracement to more fundamental valuation multiples based on the existing available market, meaning 12 or so legal states in the US, the legal Canadian market, a few medical markets in Europe and elsewhere. In total, that is probably $10 billion globally of revenue right now. So we're still in the very early days of that rollout. So it's going to take time. Like you can see how big the prize is going to be, but we still need to invest in developing the infrastructure of the industry. So that's a long-winded answer, but I think people who are thinking about the long term, this industry I think has a long ways to go in a positive way.
So, I mean, Avihu, what do you think is the best way to get exposure to this sector? Do you think it's through buying these companies, the public companies? I mean, particularly given the fact that they have been beaten up recently. I'm thinking from a retail investor perspective.
So you have today ETFs. You have the ETFs. I think the two leading ETFs that you have today that gives you exposure for the industry. If you're an investor for the long term and you're not experienced in the market and you don't know the companies, that will probably be an easy entry point. And if you are a bit more interested to choose and pick some of these companies, I would recommend to try and look to companies that have some kind of technology behind them, IP, defendable IP is important, have a clear route to market strategy. And there's many companies today in the smaller market that perhaps have some kind of idea around technology, but not how to commercialize it. So these two are key. If you want to lower the risk, so go to the big players. So usually it's the big Canadian LPs or the multi-state operators from the US. I personally, at this point, will prefer some of the multi-state operators in the US that has probably a bit more of growth potential. But yeah, that's really in high level. I don't think that a retail investor has the possibility to invest in a VC that is focused on cannabis at this point.
So, Avihu, from your experience, what's the appetite like at the moment for investing in these cannabis companies, either public or private? I mean, where's the demand coming from geographically, and where do you think are the next frontiers that investor demands are likely to stem from?
So, often Kanabo are on the route to list on LSE, and we're actually looking mainly for European investors. And there's a big appetite. We had a target of raising that we already updated twice, and because we understand that there's a possibility to raise today higher amounts than we planned in the beginning. In Israel, there's a big appetite still for cannabis companies, and I think that the place where perhaps it's not only the saturated market with companies, but even investors are waiting is in Canada. And most of the places and investors that didn't get the opportunity or chance to join the first wave that we saw in North America are just starting to take their first baby steps into investing in this industry now. And as you mentioned, I think that we're not far away from an opportunity of joining in the second wave. I think that 50 and some companies dropped by 60% since their peak earlier this year. We're starting to get to a place where valuation will make sense again.
So I know that you've thought about going public with your cannabis research house. So can you tell us a bit about why you've been considering a flotation and whether you still are?
Yeah, we're still are. We're quite close to finish our prospectus. And why are we doing this? Because we do believe that the public market is giving you added value in the cannabis industry. And we believe that the London Stock Exchange, compared to maybe the Canadian market, is a more responsible stock exchange. And we won't see a saturated market in the next 12 months or 24 months in London. And so that's an interesting opportunity for us.
Patrick, do you agree? Do you see opportunities in the UK right now?
100%. I think, Avihu hit the nail on the head. The bar is quite high. That's raised by the exchanges here, the LSE in particular, for companies to get publicly listed, and that gives investors a high degree of confidence here, and is also partially the reason why we haven't seen a flood of companies going public here following the Canadian rush to market. But as we start to see the few successful companies get public here in the UK with operations in this region, I think we're going to see a massive opportunity, and obviously the investment community here is several times bigger than it would be from Canadian sources. So the pools of capital that are waiting on the sidelines are far larger, and the audience and dare I say perhaps the credibility of the London Stock Exchange is higher than some of the other markets. So I think there's going to be a very significant opportunity here, and then finally, we do want to see some progress on legalization in Europe and in the UK to really sort of turbocharge these markets. Without that progress, it's going to be a bit tough. I mean, the existing actual market for cannabis sales in Europe is still fairly small. So we want to see progress on the activism side and on legalization in general, which I do think will be forthcoming, and that will be a major catalyst for publicly listed companies here as well.
So Patrick, what other geographies are you really excited about in terms of potential growth for the industry?
Well, I focus almost entirely on the UK and Europe. I think we're roughly 5 years to 10 years behind where North America is, but that creates a major opportunity. There are far fewer companies, that are as sophisticated based in Europe as you see in North America. So finding the teams, the entrepreneurs, and the quality management teams who will build out the industry here is a major opportunity kind of in the market right now. This Western Europe is larger in terms of population than North America, and has similar features in terms of GDP and disposable income, and culturally, the demand for cannabis consumption here is arguably as high as North America. So that's where I spend, the majority of my time. But I think the guys who are focused on North America, I think I would echo Avihu's comments about the U.S. does seem to be, the real opportunity, even though there's been a lot of progress on legalization. There's still 30 or so states that haven't legalized for adult use yet, or 25 to 30, and hundreds of millions of people there who will be clamoring for access to cannabis products.
Avihu, I know you're focused in terms of your research and development in Israel, so how do you see the sector growing over there?
Israel is unique mainly on the side of research and development and creation of IP. Not many know about that, but Israel was the first legal, if we're talking about federally legal medical market in the world. Research of cannabis in Israel started in the 60s. There's a lot of work on clinical trials here and development of new technologies. What I believe we'll see in the Israeli market is more what we see in the Israeli market with startups and high tech. We'll see big companies, probably MSOs in the US and LPs in Canada coming and doing M&As from a lot of these technologies. On the investor side, in 2017, there wasn't even one cannabis company in the Tel Aviv Stock Exchange. Today, there's 32. You can imagine the appetite that we saw. Most of them did an RTO and not an IPO, but the market grew, the public market, quite fast. And that was interesting.
All right, that's it for this episode of IG Trading the Markets. We've been speaking to Patrick Morton, CEO at Cannabis Invest, and Avihu Tamir, co-founder and CEO at Kanabo Research. Remember to subscribe to our podcast to learn more about investing in cannabis.